สวัสดีครับ Good day, management, fund manager, and all participants online. I would like to welcome you all to Thai Union Group third quarter 2019 result announcement. Today, the executive who are joining us today are Mr. York Ari, Thai Union Group CFO.
Hello, good evening, everybody.
And we have with us today as well Mr. Louis Garnier, Head of Group Accounting and Controlling.
Hi, good evening, everyone.
And myself, that's Wayanon, Investor Relations Manager. And this event will comprise approximately, as usual, for about 40 minutes of the presentation session. And after the presentation, we'll go right into the Q&A, of which we will answer any inquiry that you may have. Some of the question has already been incoming, but you're very welcome to submit the question anytime along this live session. And we will take it to answer you guys, answer you during the Q&A session. And for now, without further ado, I would like to invite Mr. York Ari, our Group CFO, to start the briefing. Thank you very much.
Okay, thank you, Kun Best. Hello, everybody. Good morning to the United States. Good afternoon in Europe, and hello, good evening here in Asia. Let me jump right into the third quarter of 2019. And look, despite a headline that you find here is not starting very positive, I have to tell you, I'm actually quite positive about this quarter. There has been a lot of headwind, there has been a lot of currency challenges, there have been a lot of tuna raw material price issues. But what we have been able to do, and this I think we are particularly proud of, we have been able to maintain the integrity of our P&L. We have strengthened our P&L, our gross margin, and we have maintained a very strong, healthy operating profit and net profit margin in terms of percent of revenue. Yes, of course, you will see, we'll explain that in the following a couple of slides. Our sales has dropped mainly on lower raw material prices and on currencies. We've ended the quarter at 31.8 billion Thai baht in revenue. That is a 1.3% contraction compared to 1 year ago. If we exclude the foreign currency effects that we face, especially to euro, British pound, and US dollar, and it is a reported basis, a minus 6.8%. But I'd like us to focus on the strong sales volume growth of 3.8%. So we are growing volumes. The key challenges we are facing is extremely sharp drop in raw material prices. This will affect Q4 as well. And the Thai baht that has appreciated against most major currencies. And we'll talk about that a little bit later. 31.8 billion in revenue, 15.9% gross profit margin. That's up 10 basis points to 1 year ago. So again, sequential improvement on the year. Sorry, something checking on my microphone. No, actually on the glass jar. I'm sorry. So 15.9% gross profit margin, 10% year-over-year improvement. We continuously focus on high margin businesses, and we have some really good news in our loss maker removal program. If you recall, we've started probably 1.5 years ago on a loss maker removal program. We have improvements in ESCO, in our Scottish salmon business. We've removed these losses. We have improvements in our Thailand-based branded business. We have improvements in our Canadian lobster business, in our Vietnamese tuna business. So we see a lot of really good improvements, and this focus on higher margin businesses is really paying off and the removal of loss makers. In terms of operating profit, of course, the absolute number, 1.5 billion, is a little bit depressed, basically from lower revenue. We still end up nearly 5% on revenue operating profit. Our SG&A ratio is at 11.2%. That is up from 1 year ago. And the key contributor here is, of course, low revenues. But I think much more importantly, we have focused on maintaining investments in marketing spending. We find it's important after several years of real hard cuts in SG&A spending that we stand firm here. We continue to invest in new product introduction. We've put several $1 million into the product launches of infusions in the US, a new product range that we've launched that is focusing on younger consumers, on after gym consumption, on the protein pack that we are providing here for consumers. We've also launched products here in Thailand and in Europe, and we continue our top line growth focus despite the currency challenges that we are facing. We do not want to lose steam on demand creation. Net profit below OP, we are more or less stable. And we've achieved the 1.374 billion in net income. That's 4.3%. We have a quarter this time that did not have any unusual effects. There are no special one-offs or anything we need to adjust. We have solid contribution year over year on share of profit, especially from Avanti feeds. That's very good. We have some positive below the OP and other income, but we have some higher tax expenses because last year we had some favorabilities on one-time effects. So overall, look, there's no hiding here. We have a weak top line, mainly from FX volatility, from falling tuna prices, but our gross margin recovery story is continuing, and even in the Q4, I do have some very strong indications that we are running here very resilient on the gross margin improvement front compared to Q4 2014. So if you look into 9 months, we've achieved now nearly 4.2 billion in net income. That's up 5% year over year. I think you all noticed our share price has been under pressure from some news around GSP, around the antitrust topics, and I'm honestly sometimes a little bit questioning myself where we need to do more on communication, because we feel we communicate a lot to our investors and to the analysts, and I personally do not understand where some of the negative messaging and the negative momentum comes from. We feel that our operational gross margin recovery story is so strong that we would hope that this is more credited by analysts and the capital market. If we look at the 9 months compared to 1 year ago, 5% up net profit, 12% up EBITDA, 30% up operating profit, 10% up gross profit. We're a little bit contracting on total revenue, which is primarily a function of FX. So I'm really not so clear where the negative signs are. I see a lot of positive signs in our fundamentals around Thai Union. And I hope all the analysts who are listening can look into our numbers and support us in looking at the positive developments that we see year over year if we look at these 9 months. Page 7, we always show you the last 3 years, last 18 quarters on our revenue, gross profit, and net profit development. As you can see, of course, top line is compressed primarily from tuna prices and from, as a major contributor, FX. Our gross profit in percent of revenue is sequentially improving. So we are year over year better, and you can see this looking at this yellow line. And our net income remains resilient, remains strong, clearly in a range between 4 to 5%. Now let's jump a little bit in to recent developments. And look, let me start with another very good news that we've received last week. You all have heard of the Marine Management Organization in the United Kingdom. The MMO has filed a lawsuit against us in context with IUU fishing in 2013. This process had been dormant for many, many years. And then last year, end of last year, it kind of bubbled up. And then mid of this year, they continued to file, maintained their lawsuit, went to the Crown Prosecution Services, and wanted to sue John West for illegal deeds and illegal and criminal actions in the market. And the result is, well, there was no evidence offered that we would be guilty. And the verdict was entered that John West is entirely not guilty on all counts what was brought against us. And this is a very positive proof on our commitment to transparent business practices. And we're very, very happy and continue to offer good quality and fully traceable seafood to consumers all around the world. So I'd like us all to note this lawsuit has been filed wrongly against us. We are not guilty. The court has decided we're not guilty, and this topic is behind us, exactly the way how we have communicated over the last quarters and months. So this topic is very clearly behind us. Another really good news, despite all those rumors and negative press, we've launched a senior debenture here in Thailand on the 6th of November, a 10 years, 4 billion baht tranche and a 7 years, 2 billion baht tranche with an average financing cost of 2.9% in Thai baht over an average life of 9 years. We had 20 institutional investors participating in the book building, and we were 3.5 times oversubscribed. So I think there's a lot of very positive support in the capital market for our business, and we're very happy to welcome these 20 institutional investors. Of course, we know all of them. We're very happy that you continue to support us, and we will continue to honor this as being a great creditor in the market. Now, another news that affected our stock in the past couple of weeks, Donald Trump, announced a decision to view Thailand as a problematic country in terms of human rights. We, of course, are not entirely certain if this is really fact-based or if there are other reasons behind. The decision was made that the GSP eligibility for importers from Thailand to the United States has been revoked for many items. Now, the good news is Thai Union is not affected by this. With no impact from this decision on the GSP eligibility. We've reviewed all our documents and all our export transactions, and we do not foresee any material impact on our business from this decision. We had a webcast together with most of you a week ago, a little bit over a week ago, and we're very happy that this good news has been received well in the market. And actually, I need to say, Thailand is putting a lot of efforts in place to fight human rights abuses, to uphold human rights standards, and to support here also our fundamental beliefs. And we will continue on the side of our peers here in Thailand and the government to uphold and strengthen human rights themes in the Thai market. Another great news is our commitment to innovation. We have launched a food tech fund, a corporate venture capital fund with an initial commitment of $30 million US, investing into food tech startups in the areas of alternative protein, functional nutrition, and value chain technology. And our first investment was into a company called Flying Spark. It's an Israeli company looking at fruit flies and fruit fly larvae that have a 7-day lifespan and which body mass multiplies 250 times over the life cycle. And this technology enables us to a low-cost cultivation and processing of insect protein and a small fraction of insect-based oil with nearly zero waste and nearly zero emissions. This is one of the first startups that we've invested in. We want to work with this company and drive our edge in alternative proteins forward. Awards and recognition, I don't want to go through this. We again won a couple of awards in the industry. We're very happy as one of the best corporate institutional investor awards receiving that. That's great. Our yellowfin tuna slices have received another product design award. It is always a great recommendation for us if we see that others are recognizing our efforts and our contributions. Also on the sustainability front, we have now for the second time in a row achieved the #1 position among the global food products industry in the Dow Jones Sustainability Index. This is an amazing achievement, and I'm really honored and proud to work here with Darian and with others in the company to uphold this amazing leadership role in sustainability. Consolidated financial results. Look, we said most of the things I've already introduced. Challenge top line. Quarter three result revenue declined 6.8%, mainly from depreciating in key currencies: British pound minus 12%, euro minus 11%, US dollar minus 7%. Really challenging. But we have solid organic growth, and that's really great, 3.8%. and we have a strong growth, especially in frozen and chilled segment, and the pet care and value-added segment. The lower gross profit in Thai baht, but we still have a rising gross profit margin of 15.9% compared to 15.8% a year ago. And again, frozen, pet care, value-added margins are all improving. We have tight cost control on G&A expenses, but we're not jeopardizing our investments into demand generation and into growth. Of course, SG&A as a result of that is a little bit high with 11.2%. We will see how we can continue to manage this into Q4. Our non-operating items are stable. Let me give you one last comment before I turn to Ludo, who will give you a little bit more details on the FX. If you recall 2 years ago, 1.5 years ago, we already had this very, very difficult FX situation with the Thai baht being stronger or below 31 to the dollar. And if I recall, already at that time we shared with you, this cost us around $15 million in profit per quarter. If the Thai baht is as strong as we are now, this costs us $15 million. And I think we are in a very high Thai baht period. And we do have to recognize that this has an effect on our bottom line. And so it did in Q3 as well. But before we talk more about this, let me pass to Ludo, who will give you a little bit more details.
Thanks a lot, Jörg. So here we're in slide 18. So this is our usual graph regarding the fish price. And here you can see that in Q3 19, the average fish price for the tuna was around $1,200, which is almost flat compared to Q2 19. However, if you compare to Q3 18, you have a huge drop by 17% because in Q3 18 we were at $1,467. Just to make it very clear, when you have such a drop in the fish price, then usually our customers just wait and see. And I think this is one of the key reasons for the tuna sales drop in Q3 19 compared to last year. Our customers are just waiting. They are just delaying their orders on this one and just wait for further decline. As you can see, in October 19, we reached a price of $900. And let's see what's going on for November and December. Just a quick focus on the top line. We already shared a lot on this one, but just again to highlight, when you see the reported numbers, the top line are declining by 6.8%, which is huge, but of which 5.5 is just explained by the FX. And if you remember, in Q1 and Q2, we already had to face with a depreciation of GBP and Euro versus Thai baht. So in Q3 we have the same situation. Plus also we have also now the USD, which is depreciating versus the Thai baht. If you remember, last year in Q3 18, the USD has been recovering versus Thai baht. This is not the case anymore in 2019. So we really have a huge impact coming from the FX and the depreciation of all major currencies versus Thai baht. However, having said that, we have indeed a decline of our organic business, excluding the effect by 1.3%. And here, I will come on the slide just after, just to explain to you the situation. We have very different performance depending on the segments. So here you can see we have the performance minus 1.3 excluding the FX, mostly coming from the tuna. Tuna is declining by 1.6, 12%, but all our other businesses are growing. Shrimp is doing quite well, sardine, mackerel, and pet care are also really growing. But the tuna is really the one segment explaining the drop in Q3 19, again, mostly explained by the fish price, which is declining by 70% versus Q3 18. And then after this one, you have these two huge boxes, which are the USD effect and the Euro effect, which is total something around 1.9 billion baht. So this is a massive impact in our in our top line. The breakdown by geography, we don't have any big change. The domestic market has been increasing. You can see 5 years back, we were close to 8%. Now we are around 13%. The key driver, of course, on this one is, first of all, the currency. Thai baht has been really strengthening, and Europe and the US have been declining on this one. But our domestic performance is really impressive, and we are very happy about this one. The sales breakdown by business, we don't have really big change on this one. The brand still represents something to 36 and 6% for the full service branded, so we don't have big change on this topic. Moving to the gross profit, so in Q3 19 we achieved 15.9% gross profit margin. We are quite happy with this one. If you compare to Q4 18, Q1 19, we were close to just below 15%. In Q2 19, we achieved a record high 16.7, and in Q3 19 now we're at 15.9, which is recovering compared to the 15.8% that we achieved in Q3 18. Of course, due to the top line shortfall, we have a drop in the gross profit value, which is 5.1 versus 5.4 last year. And in fact, this is the key reason for our net profit value drop in Q3 19 versus last year, because between the gross profit and the net sales, we don't have any significant change. So the drop that you can see here in the gross profit, you can find this one also in the net profit, at the end of the day for the quarter. Looking at the 9 months, we are still recovering compared to last year, by 9.5%, many thanks to the very strong Q1 and Q2. If you remember, we achieved good performance during these 2 quarters. Q3 19, again, very different situation. The frozen business is achieving a very good performance. Same for the pet care, the value added are doing really well. The ambient business, and especially the tuna, and especially in Thailand and in Europe, is not doing that well on this one. So moving to the OP for the quarter, we have the same shortfall that we can have in the GP. So we have a shortfall by something like 350 million baht, declining by 90% versus last year. We also have some huge FX impact on this one, something close to 200 million baht. I think maybe we should discuss about this one. And on the SG&A, we are almost flat versus last year in terms of amount on the quarter. However, due to the top line shortfall, indeed the SG&A percentage is increasing to 11.2% versus 10.4% last year. Moving to the EBITDA, so we achieved 3.2 billion baht in Q3 19, which is very close to the performance we achieved last year in Q3 18, 10% of EBITDA margin. Over 9 months, we achieved 9.3 billion baht, which is really increasing compared to last year, and this is again thanks to the very strong recovery we achieved in Q1 and in Q2. Net profit, so it's just a consequence of the gross profit and the OP. So we achieved 1,374, declining by 21% versus last year at 1.7. However, over the 9 months, we are really recovering at 4.2 versus 4 on this one. Just a very quick focus on the non-operating items. We have some ups and downs which offset each other. We have some increase in the other income, some good news also from the share profit, and mostly coming from Avanti, as explained by Jörg. Our expenses on the discontinued operations are declining, which is a very good news. However, these impacts are offset by an increase in the income tax expense and also the FX. We are still generating some FX gain in Q3, however much lower compared to last year. Maybe just one point on the income tax. The income tax expense appeared to increase in Q3 19 compared to last year, mostly due to 2 effects. First of all, the tax credit coming from the US are declining, and you will see on the focus on Red Lobster that we have something like 40 million baht coming from Red Lobster tax credit, plus also some lower tax credit coming from the rest of the US operation. And we have also some higher tax expense and deferred tax coming from the Thai part, and in Europe we are almost flat. There is no big impact coming from this one. One-off, we don't have anything significant to report in Q3 19. Just as a reminder, last year the adjusted net profit was at 1.7, the reported net profit was at 1.3, And the key one-off that we reported last year during this quarter was the ESCO business closure, where we recorded an accrual of 4.4 billion baht. But this quarter, we don't have any significant one-off to report. The EPS is up 4.8% year on year, just coming from the improvement of the performance over 9 months. Just a very quick focus on the Red Lobster. This is our traditional slide on this one. A few comments on this one. First of all, Red Lobster is still a profit contributor in Q3 19 at 132. However, it is dropping compared to Q3 18, which was at 287. The two key factors for this one is we have a declining share of profit, and we have been facing in Q3 19 with a challenge situation in the guest count. Guest count are declining on this one, and we are working very hard with Red Lobster management to turn around the picture and to get back to improvement of the situation that we have seen in Q1 and Q2 19. Regarding the finance yield, we don't have any big change just from the FX, but it's almost stable compared to the previous quarters. And then we have a drop in our income tax credit. We only have 63 versus 104. We already shared this information that it's very difficult to predict this one because this is related to the ongoing situation of Red Lobster, but also the situation and the profitability of the rest of our business in the US. But overall, Red Lobster is still positive, 132 in our net income and positive also on the EPS. Free cash flow, I think this is the first year that we have 4 quarters in a row of quite stable cash flow. We are happy about this one, 1.1. It could be a bit better. If you compare to last year, 2018 was a very unique situation, mostly explained by the fish price and the change in our net working capital. I think in 19 we are back to a more normal situation, and we are quite happy with this development. Slide 13, the net debt change. We have a net debt which is almost flat compared to Q4 18 at 64.4 billion baht. However, we have a deterioration of the net debt to equity ratio from 135 to 143, and I will explain this in the next slide. Just on the net debt bridge, so we have the EBITDA at 7.4. This one includes the antitrust accrual we did in Q2. If you exclude this one, then the EBITDA is higher than 9 billion baht. And then we have a capex of 3.4. I think this is something which is important to highlight. We decided to continue to invest strongly in our operations. We have different key projects within the group, and we continue to invest strongly on this one. The other key impact is the dividend we paid, 1.9 to TU Group shareholders, and 2.2 if you include also some dividend payment to some non-controlling interest. Very quick focus on the net debt to equity ratio increase. As I said, the net debt is almost stable compared to last year at 64 billion baht. But however, the key impact is coming from the drop in the equity. As you can see here, the equity is dropping from 46.2 to 45.2 billion baht. And you can see here the key highlight. We have a reported net profit, including again the antitrust we did in Q2 at 2.8. Then we have a dividend paid to TU shareholders by 1.9. But in fact, the key factor for the equity drop is related to the FX translation. So here over the 9 months, it cost us something like 2.2 billion baht. So this is a massive impact in our equity. And of course, if you exclude this FX impact, the net debt to equity ratio will improve, in fact. But here, due to this FX impact in over the 9 months, our equity is dropping, and as a consequence, the net debt to equity ratio is slightly deteriorating to 143. Next slide regarding our debt. We don't have any significant change on this one. We still have a massive exposure to the Thai baht, and then on the maturity we have something which is a bit more exposed to the short term, but it's not really significant on this one. The key ratio are just a consequence of the profitability. So return on equity at 13%. We were at 16.2 last year. ROCE at 9.6 versus 9.9% last year. Inventory days almost flat versus Q2 19 and versus Q3 18. and the net working capital at 109 days versus 107 and 109 days last year.
Let me quickly jump back to page 31. And look, I think I find this rather important. I mean, during the whole year, we have a good, strong cash flow. We continue to pay a really strong dividend. These are the two main, and of course we pay interest to our banks. These are the two main impacts on our net debt position. If you look at our total equity that we reported on January 1st, 46 billion, we then have a reported net profit that's of course much lower than our management number because of the additional accruals that we did for the U.S. antitrust case to clear that issue out. We continue to pay a strong dividend, but the key impact here is really a 2.2 billion Thai baht pure translation effect on our balance sheet. So our equity base has reduced purely from FX translation effects. And I want you to really take note of this, that this is not because our balance sheet is suddenly changed, but it's purely an FX translation effect. It's not a cash effect. This equity is not gone. It is purely a reduction out of a translation effect, and this has led to a very small increase in our net debt to equity. We've added the slide for everyone to analyze a little bit more in detail and to really give confidence. Our balance sheet is completely intact, but of course we have to recognize the translation elements on the numbers.
Thanks a lot. Just one thing on the ratio, just to end up with this one, the net debt to EBITDA at the end of Q3 19 stand at 5.06. It was 4.92 last year. Again, explanation on this one, and the debt to equity, we just explained this one. Having said that, I will pass it through to Kunbest to comment for the performance by BU.
Right. Thank you very much, Ludo. For now, when we come to the operating factor, okay, we have been hitting by a few quite large factor, mainly that has been affecting on the sales of our company. As we can see here, the key operating factors such as the tuna price has been declining. I mean, third quarter tuna price has been staying at $1,217 per ton, which is down 17% compared to last year. Similarly, with the shrimp price, which is down 9.5%, and salmon down by 4.1% compared to last year. This drop in commodity prices has put some drag on our revenue growth and resulting in revenue decline. But moreover, we have a bad currency situation within the same quarter as well, as US dollars has been depreciating against Thai baht of 6.9% compared to last year, and European currency, both the euro and pounds has been depreciating against Thai baht by 11 to 12%. So with these circumstances, we have delivered a negative sales growth in terms of Thai baht. Otherwise, I mean, we should have been landed in a much better spot. In terms of the three strategic segment, ambient seafood, which is mostly canned tuna predominated, still account for 45% of the total sales, frozen and chilled seafood 40%, and pet can value added the remaining 15% of the company total sales. For ambient seafood, as we can see here, our sales have been dropping by 14% compared to last year during the third quarter, while in the contrary, our quantity sales have been dropping by just 3%. This has been also another point to elaborate how much both the currency impact and the commodity price has affecting our revenue trajectory. On the other hand, we continue to see the margin on overall basis of ambient seafood still stay at about 18%, which is lower than last year. That's why our branded business has continued to deliver a stable margin profile. The private label business, which is the export OEM out of Thailand, margin has been dropping pretty significantly, down to 13%. Partly has been cited by both Europe and Ludo early on. In the falling tuna price environment, customers tend to become more cautious regarding their purchase, and therefore our margin has been dropping for the OEM domestic business export. However, I mean, we have seen quite a different light for the frozen and chilled seafood. That despite the sales has been declined by 2% compared to last year, we actually, on the underlying organic growth, we continue to see a quantity growth of 15% compared to last year. And not only that, we continue to experience a margin of 11%, which is a full percentage higher compared to last year. This has contributed and support our margin expansion that happened in the third quarter of this year. And so, as the pet care and value-added business, where the sales have been growing by 6% and quantity sales have been growing by 3%. So, I mean, this pet care and value-added has been proven to be a strong contributor of our company, with a gross profit margin continue to be at a solid 22% during the third quarter. In regard to the geographic sales mix, U.S. still about the largest market, accounting for 38% of our company total sales, Europe 31%, Thailand, however, has been at 13% and has been a strong growth market, as I will come down to talk about in a few slides down the road. On the U.S. market, okay, I mean, we have reported sales declined by 5.1%, but given that the US dollars have been depreciating about 7% against Thai baht. So if we exclude the FX impact, sales in the US would have been only declined by 1% compared to last year. The US frozen business, both shrimp and lobster, continue to deliver a solid growth, while the canned tuna business sales has also been up, but obviously have been cut down by the impact of the currency sales. In terms of for the Europe market, where the currency impact has become more pronounced, especially in the third quarter, where the Thai baht sales has been declined by 10%, 9.9% compared to last year. But given that the strong Thai baht appreciation against the major two European currency, should we exclude those FX impact, Euro sale would have been actually increasing by about 1% compared to the previous year. But on Thailand, we continue to see a very solid growth, 18.5% compared to last year. We continue to diversify and focus our marketing efforts into the whole market, partly to offset the weak export sales that we make. And we have also launched quite a number of products in the recent quarters, which has helped supporting our sales growth as well. For the emerging market, we have seen the sales decline by 17% compared to last year. The key decline market has been coming from the Middle East market, partly due to the fact that the tuna price has been on a downtrend, and the customer has become, especially on the private label side, has taken a more cautious stance and buy less. However, we have continued to see the Chinese sales deliver a solid growth of 18% compared to last year. And this is where we believe will continue to be our key growth market and in the Asian market. For the third quarter segment, third quarter result by segment profitability, the ambient seafood has been down a bit, while frozen and chilled and pet care business margin has been improved compared to previous year. And as a result, from the sales of 31.8 billion, we have delivered a solid gross profit margin of 15.9%, which is up 10 basis points compared to last year, and deliver a gross profit of 5 billion Thai baht. Okay, so that without wasting any more time, I mean, let's that conclude the presentation, and I would like to move on to the Q&A session where we will answer and respond to your incoming query.
Thanks a lot, Khun Best. Maybe we take the first one. So we have a first question, which is, what are the causes for the sales decline during Q3 18? and what are the business segments driving the volume growth. So just to make it clear, the key two factors you need to keep in mind for Q3 19 performance are really the FX. Again, we have a reporting top line decline by 6.8, of which 5.5 is only explained by the FX. If you restate this one, we have an organic decline by 1.3%. And this is mostly driven by the tuna fish price drop in Q3 19. If you compare to 1 year ago, huge drop by 17. And when you have such a drop, the customers, they just delay their orders on this one. However, when you look at the situation, business segment by business segment, we have a very, very strong performance from the frozen business and the shrimp and the pet care, which are partially offsetting the decline of the ambient due to the tuna drop. These are the key factors for the top line.
We have some questions around operations. One question is, how do we manage currency risks? We've adopted hedge accounting early this year, so all operational trade-related FX gains and losses are recorded under revenue and gross margin in the respective underlying trades. All the rest is underlying FX gains and losses below OP. We have implemented a very, very strong hedging policy. We are, for our Thai business, hedging around 50% of our inventory. We hedge 100% of all accounts receivable, and together with the accounts payable, which are primarily US dollar, this gives a very nice natural hedging structure. In Europe, we're hedging 50%. We have already hedged 50% of 2020 budget rates, and we will continue to increase our financial hedge ratio into 2020 once we are closer to the budget period. Any large order that we make quotes on to customers, we are securing those orders with financial hedges. So that's one way how we manage currency risks. For intercompany loans, Thai baht denominated loans that we take up, or bonds that we then convert into intercompany loans in foreign currency, we will always hedge up to maturity, so there's no intercompany FX exposure. Well, look, a very deep question. What business segments drive volume? What's the company plan to combat the sales decline? Look, this is a very deep question around our strategic direction. I think we've explained many, many times. We have growth areas in China. We have innovation. We are launching a lot of new products. That's why we put a lot of top marketing investment in place. We have a food service initiative where we see really solid contributions on top line. We've started our oil refinery business, crude oil business, so we see very nice margins and profit contributions from our crude oil sales. These are some of the topics that we do. We have now started an initiative around alternative protein. So all of this creates a really new business portfolio, enterprise portfolio going forward. And if we look at our core business, look, there's a lot of innovation happening. We're launching our plastic cups. We're launching the infusions. There's a lot of innovation happening, new products happening, where we are competitive and where we feel we really bank on our sustainability story that we have and gain trust from customers. So of course, it's a concern that currency and raw material prices are eating into our growth momentum, but we do feel that this is a seasonal effect here and an effect that we face in Q3.
We have another question regarding the tax expense, which are increasing in Q3 19 versus Q3 18 by something like close to 130 million baht. So indeed, we have a tax expense increase. The two key contributors for such increase. First one is the US, and the US is coming from Red Lobster. You have a specific chart on this one. We explain there is an increase by something like 40 million baht just coming from Red Lobster. Again, we are not fully controlling the tax rate generation at Red Lobster, but also the rest of our business in the US is more profitable than in Q3 18, so we generate more tax here. And also in Thailand, we have been enjoying in Q3 18 some positive deferred tax and tax credit also on this one, which we are not enjoying anymore in Q3 19. So that's why overall we have such an increase of the tax expense in Q3 19.
Why is the tuna price decline going to $900 per ton? Look, the catches have been great, and it's really primarily a supply topic. So there's a lot of supply coming to the market, and that drives prices down. Well, of course, this will affect negotiations for 2020, but I think retailers are educated and they do realize that just 1 or 2 months or 3 months of low prices do not change the whole annual period. So I do feel we have a very good story to our customers and clients. We try to be as close as possible to real annual average cycle of pricing with our clients. So we do not feel that there is any long-term effect, but in Q4 I think we have to be realistic with such a sharp drop in tuna prices. Again, our private label business is of course under a lot of pressure. Our inventory costs do not adjust within 1 or 2 weeks. We need 2-3 months to adjust the average inventory costs. So I think we are seeing already some margin depression in the private label business in September and in October. So I think there will be some impact on Q4. We do not see that this gives any unusual impact on our branded or private label business. Of course, branded, we will earn a couple of dollars margin more, and in private label, we're a little under pressure. I think it's also not a surprise that during a period where prices fall, customers are holding back with orders. That creates a little bit of a volume overhang, but this is not anything unusual, not what we've not seen somewhere else. So I think we have to assume that Q4 is of course a little bit challenged on top line as well as on margin. But if we look at the overall trend, we will far outstrip Q4 2018 margins also in 2019. So we will really continue our recovery story. So I do not expect a very material impact on Thai Union. Headwinds on top line, of course, I think we've discussed this many times, that we have to accept that this year will not be a growth year given the currency effects and the difficulties on the tuna price. There's a question around Thamachat Seafood. What's the rationale of buying this business? Look, we've bought this business in order to gain a stronger foothold into the Thai retail market. Thamachat Seafood has around 160 retail outlets, is represented in basically all premium retail places and operates the chilled seafood space. This is the ideal platform and the ideal channel for us to grow in Thailand, to bring more products onto the chilled shelf, but also onto the frozen shelf. We're relaunching Q-Fresh, the Q-Fresh brand very soon with a new massive penetration of the frozen shelf in Thailand. That's the key rationale. We're buying 39.9% on top. This is the second step of the acquisition. The first acquisition of 25.1% was to get to know Julian and Yiran, the co-owners, and how we manage together. The relationship goes very, very well. We have a lot of great collaboration, so we go now to the second step, and this is where we want to co-manage this company together with Julian and Yiran, who maintain their 35%. We typically do not disclose profits or net profits of subsidiaries, and I want to hold it like that also for Thamachat Seafood, so I don't think we want to share profitability levels of individual operating companies. The business is roughly 1 billion baht, growing very strongly in the market. We have 160 retail outlets. We have large retail chains coming to us, working with us, and with our financial backing from Thai Union, we give Thamachat Seafood enough financial firepower to grow retail presence even more. We have 7 or 8 F&B outlets, the Dock, the Lobster Lab, the Ocean Bar at Siam Paragon. So some really prime locations, and I invite you to join one of our restaurants. I invite you on the weekend to come shopping at one of our retail outlets in any of the premium supermarkets in Bangkok and outside of Bangkok.
So we have next question regarding the MMO case, and the question is quite simple. Is it really over? So here I will refer to the slide number 9 that we disclose. Yes, indeed it is over. And our subsidiary, John West UK, was cleared of all the IUU fishing charges on this one. We are very happy with this development. It was a very long procedure, very long investigation from the MMO since 2013. At one stage, we believe it was really a cold case, but then suddenly 2 years ago, they went back again on this one. So now we have a verdict, which was provided by the judge on this one, and clearly it's fully aligned with our thinking, and John West has been verdicted not guilty on all counts on this one. Very happy with this one. Again, this conclusion for us is a positive proof on our commitment to transparent business practices, and we will continue in this direction.
Red Lobster, there's a question around how is Red Lobster doing, why Q3 has been weak. Very good observation. We're not happy with Red Lobster's restaurant performance. We see guest counts not going in the right direction. We see that there is an increase in cost pressure from very high lobster prices and high raw material prices. We see that we need to be better in marketing our major events. So I think very good observation. We're not happy with current trading. We are working with management. We have Kim and Bill here next week in Thailand, and we'll have much more discussions around how can we get to the next level of a financial performance improvement. How can we ignite the next level of real productivity and performance turnaround. So we need to see more from management on Red Lobster going forward.
We have another question regarding the GSP changes which happened a few weeks ago. We know there was a bit of emotion on this one. That's why we decided to have a specific slide on this one, which is slide 11. So again, we did some research, and our conclusion is our key products to the US, which are tuna and shrimps, are not benefiting from this GSP scheme. So as a consequence, we do not foresee any material impact coming from this change.
Okay, I have one more last question on the perpetual bond. The question came up, why are you issuing a perpetual bond? What's the purpose? What's the target of? And look, it is exactly as we shared now many times. We have from over the last couple of quarters and basically the last 3 years, we have not been able to materially deleverage our net debt to equity. We do want to deleverage. We do want to get into positive discussions on future growth and future investments. We want to get over this overhang on what the market perceives as a high leverage. And look, let's face it, 1.4x or 1.35x net debt to EBITDA, that's not really a very high leverage. Of course, EBITDA is a bit short, but look, we have this overhang in the market. We have this overhang in the discussion around a high leverage, and we want to take this opportunity of a very attractive low interest rate environment to go into this new type of funding, a perpetual instrument that will be fully equity accounted, and it will help us to deleverage the company. It's going to be around $200 million US to refinance this. It is just purely going into our 12 billion bond refinancing strategy, so there are no other purposes behind this perpetual issue. We need to refinance 12 billion baht of bonds in the next 6 months. We have refinanced 6 last week, and with this 4 plus 2 green shoe, we'll refinance another 6. So I think we are in a relatively good space here, and we have in the process deleveraged the company. The money will go nowhere else than into refinancing existing debt. What did I want to highlight? Oh yeah, sure. Sorry. Now I get it. I need to highlight at this stage. I'm sorry. The perpetual bond is issued here in Thailand to Thai investors, and this is absolutely no invitation to any American citizen or American investment company to invest or be even interested in our perpetual instrument. This is purely for Thai investors and is absolutely not an attempt to get any interest of American investors into this instrument. In fact, I don't think you can even invest into it, to be quite frank. So this is for the Thai market, for Thai retail investors, and for everyone who is not a U.S. investor.
All right, so with that disclaimer, that brought down and finished all of our question list on our hand. And this concludes our live webcast session of the Thai Union Group third quarter result, year 2019 result announcement. Thank you very much for your kind participation and your time. Thank you very much for Mr. York Irie, our Group CFO, and Mr. Ludovic Garnier, our Group Accounting and Controlling.
Thank you.
Thanks a lot.
And for anyone who has any further question, please let us know and please contact us at IR anytime during the office hour, obviously.
And for those of us in Thailand, see you all tomorrow at the Grand Sheraton for a live session. We have a couple of surprises for you.
Okay, that concludes our session today. Thank you very much for your time. สวัสดีครับ
Good job.
Thanks a lot. Good evening.